If you've been following the hog industry over the past couple of years, you can probably feel a subtle shift in market sentiment, especially from 202.5 into 2026. Discussions about the next pig cycle are clearly picking up agitating, and one representative view comes from Morgan Stanley, which suggests that a new cycle turning point may be approaching. But what really matters is not just the conclusion, it's why the market is starting to believe in tea. Cycle again at this point in time, after the dramatic ups and downs of tea. Previous cycle, many people once questioned whether large-scale industrialization would smooth out volatility, but reality shows that the cycle has yet disappeared. It has simply evolved in structure and rhythm at its core. The pig cycle is still driven by supply and demand imbalance, but now the supply side has shifted from fragmented small farmers to large-scale play. RS like Muyuan Foods. And this structural change has a very important implication. The amplitude of the cycle may be reduced, but the cycle itself will not vanish, and may even become more structural in nature. Looking at current data trends, the industry has been in a capacity reduction phase since, say, 2025, with breeding sow inventory declining for several consecutive quarters. And historically this has been one of the most critical leading indicators, because it determines supply conditions 1 to 2 years ahead. Once our inventory falls below a certain level, the market gradually enters a tightening supply phase, and pork prices tend to rebound. However, this time too, aims are slightly different. Cost structures have changed significantly. After a period of rising feed costs in previous years, they are now relatively stable, which means that if pork prices recover, profit elasticity for large-scale producers could be stronger than before. But at the same time, scale brings a new dynamic. The industry reacts faster to price changes. In the past, small farmers adjusted slowly. Now large companies can quickly and slaughter timing based on profitability, which could make cycle turning points shorter and sharper rather than long and gradual. On the demand side, there hasn't been any explosive growth. Overall consumption remains relatively stable, which suggests that even if pork prices rise, it is unlikely to see extreme spikes, more likely a moderate recovery instead of a dramatic surge. In this context, the positioning of Muyuan Foods becomes clearer. Its core advantage lies in cost control and scale efficiency, allowing it to survive downturns and even expand when weaker players exit, which typically enables it to gain market share during post-cycle consolidation. But there is also a key consideration. The larger the scale, the more sensitive a company becomes to price fluctuations. If the price rebound is weaker than an expected, profit recovery may be limited. This is exactly where current market divergence lies. Some see it as the biggest beneficiary of the next upcycle, while others are more cautious, believing that reduced volatility could also mean reduced upside elasticity from a capital markets perspective. Here, the pig cycle is no longer just about tracking price trends. Investors are increasingly focused on cost curves, cash flow resilience, and how companies manage cycles. This shift has become much more evident after 2025. Many weaker players have already exited during the downturn, leaving behind Companies with stronger efficiency and scale, which implies further industry consolidation ahead, and that the benefits of the cycle will likely be concentrated among a few leading firms, while overall industry volatility may become more controlled. Coming back to the original question of how this play might unfold based on current signals, it is more likely to be a moderate upward phase rather than a sharp reversal. Pork prices may rise in stages, but the extent will depend on how much supply contracts and whether demand stabilizes or improves. For companies like Muyuan Foods, the real test is not just whether prices go up, but whether they can maintain cost advantage and cash flow stability throughout fluctuations, because that ultimate why determines whether they are short-term beneficiaries or long-term winners. So rather than viewing this as just another price cycle, it may be more accurate to see it as a transition into a new phase of the industry, where revival and sustained profitability under a smoother but more complex cycle will define the true leaders.